$111 billion in credit card fees flowed to Visa and Mastercard in 2024, nearly triple what they collected just 10 years earlier. This is the story of who actually benefits from killing cash, and it is not you. Every time you hear that cash is dying, that we are heading toward a cashless future, that physical money is outdated and inconvenient, you are hearing a message that serves very specific financial interests. $80 million in lobbying has been spent to make sure you keep hearing it. Let us start with the numbers, because the numbers tell you everything about motivation. Visa's net income reached $19.7 billion in fiscal year 2024, and that is not revenue, that is pure profit. Their profit margin sits at 55%, which becomes striking when you consider that most successful businesses operate on margins between 5 and 20%. Mastercard trails close behind with net income of $12.87 billion and a 46% profit margin. Here's the thing about their business model: they do not actually lend anyone money. Banks take on risk when they extend credit. Visa and Mastercard simply operate the rails that transactions run on, collecting a fee every time someone taps, swipes, or clicks to pay. Each individual fee looks small, typically between 1.5% and 3%. But processing over $15 trillion in transactions annually turns those percentages into extraordinary sums. A record $187.2 billion in swipe fees hit American businesses in 2024. The National Retail Federation calls these fees most retailers' highest operating cost after labor, and research suggests they add nearly $1,200 per year to the average family's expenses, whether that family uses cards or not. Cash represents a problem when you are running these companies. Every dollar spent in cash generates zero fees. The former CEO of Visa, Al Kelly, put it plainly in 2017 when he told investors, "We're focused on putting cash out of business." That is not an interpretation. Those are his exact words. When a company's business model depends on eliminating an alternative, you would expect heavy investment in making that happen. Accountable.us tracked the full picture and found that credit card industry trade groups, Visa and Mastercard, spent a combined $80 million lobbying against the Credit Card Competition Act, a bill that would simply require large card issuers to offer merchants a choice of which network processes their transactions. Then there's the Better Than Cash Alliance, a partnership hosted at the United Nations that launched in 2012 with an explicit mission to accelerate the transition from cash to responsible digital payments. Founding funders include Visa, Citigroup, the Bill and Melinda Gates Foundation, and the United States Agency for International Development, which means American taxpayers help bankroll it. The work gets framed as promoting financial inclusion for the poor. Critics see something different. The Cato Institute noted that while nonprofit funders may sincerely have the interests of the poor at heart, payment processors have other agendas, namely transaction fees. Mike Lee, who runs the ATM Industry Association, offered a blunter assessment. He said Visa and Mastercard are spending the most money to do that. It is primarily a war that they started. Advocates for cashless systems point to efficiency, hygiene, and convenience, and for many people those benefits are real. But the question is not whether digital payments work well for most people. What matters is what happens to the people for whom they do not. 1.4 billion adults worldwide remain unbanked, according to the World Bank, representing 24% of the global adult population with no access to formal financial services. The FDIC 2023 survey found 5.6 million American households completely unbanked, with another 19 million considered underbanked. Black households face an unbanked rate of 10.6%, while white households come in at 1.9%, which means black households are more than 5 times as likely to have no bank access. One group rarely gets mentioned in discussions about cashless convenience: survivors of domestic abuse. The UK charity Refuge said the move towards a cashless society is putting lives at risk, and the National Network to End Domestic Violence reports that 99% of domestic violence cases involve some form of financial abuse. Cash offers something digital payments cannot. It is untraceable. requires no partner's approval, and enables escape without detection. When cash disappears, their escape route narrows. Every digital transaction creates a record, and those records hold value for corporations and governments alike. Mastercard built an entire data and services division around monetizing transaction information, and now advertises access to over 125 billion purchase transactions through more than 25 data products, with one product promising to capture person-level data for artificial intelligence-driven predictions. Bloomberg reported in 2018 that Mastercard and Google struck a deal to provide credit card data for Google's ad measurement, and those partnerships reportedly give Google access to around 70% of credit and debit card transactions in the United States. What the ACLU uncovered goes even further. Arizona's Transaction Record Analysis Center maintained a database containing 145 million financial transaction records, with access granted to thousands of law enforcement officers nationwide. Jay Stanley, the ACLU senior policy analyst, explained the stakes. He said, "If you use your credit card for all of your purchases, information about a wide range of your activities, such as medical issues, political contributions, sexual activity, and the amount of alcohol and cigarettes you purchase, is being collected." His warning was direct. If we lose cash as an option, we're going to regret it later. Not everyone accepts the cashless trajectory as inevitable. Sweden stands as the most cashless country in the world, where only 8% of the population uses cash. In Sweden, a resistance movement emerged called Kontantuupproret, or Cash Rebellion. It was founded by Bjorn Eriksson, former National Police Commissioner of Sweden and former president of Interpol. Eriksson's assessment cuts through the marketing. Consumers are not shaping this utopian dream of a cashless future. The banks and credit card companies are. Cash is disappearing from society, and the reason is pure profit. Sweden's central bank found citizens opposing a cashless system outnumber advocates 3-1. Legislation passed in 2021 now requires major banks to provide cash services. American cities started pushing back as well. Philadelphia became the first major American city to ban cashless stores in March 2019. Councilman Bill Greenlee explained that he could go into a coffee shop across from City Hall that is cashless and get his coffee and muffin, but the person behind him who has United States currency cannot get the same cup of coffee. It is a fairness issue. New Jersey, San Francisco, and New York City followed with their own bans. Brett Scott wrote a book called Cloud Money, examining the cashless movement, and he offers a useful comparison. Cash functions like a bicycle, while digital payment works more like Uber. Both get you where you are going. But imagine if Uber became the only way you could travel, your entire transport system controlled by an oligopoly. Scott's observation stays with you. For most ordinary people, they want options to remain open, and only the industry has an incentive to destroy the ability to use cash.